58% of the world's assets are denominated in dollars.
Got it.
So they're priced in dollars, 58%. Like the next several currencies don't even amount to 10%.
Really?
Right? So you've got, I think the euro might get there at about 10%, but beyond that, it's just a bunch of other smaller currencies. So store of value, 58% of world's assets. And then we talked about a medium of exchange.
Mm-hmm.
In the United States, or actually in the Americas, 96% of the trade is done in dollars. Go to Asia Pacific, 74% is done in dollars, which is contrary to popular belief. I mean, most people would think that they're using the yuan or the yen or something like that. Mm-hmm. And then really all else, other than, I'm going to carve out the EU quickly, but other than, so pretty much anything else is going to be about 70%.
The very latest on economic development, workforce, and industry sector news in Southern Colorado. Here is Business Digest Weekly with our host, Dirk Hobbs.
All right, good Friday afternoon, ladies and gentlemen. Welcome to Business Digest Weekly. Can you believe we're in December? It is December 6th. I'm not even going to count the shopping days because I'm almost done. So hopefully you are too. But I do want to remind you, shop local, ladies and gentlemen. If you're in Southern Colorado and within earshot of this program, take a look at some of those local stores, those local restaurants. When you pump your dollars into the local economy, guess what? Things tend to stay a little more stable, and the roads tend to stay smoother. The lights go on, the medians are mowed, all that good stuff. So shop local as much as you can. Now, it's great and it's convenient to have Amazon for that gift that you forgot to get mom or dad, but at the last minute. But definitely do your best to shop local. So anyway, here we are, Friday, December 6th. We're only 2 short hours away from happy hour, and I'm glad you're with us. If you are in the financial realm at all, you're going to want to hear this broadcast because we have a subject matter expert in the room with us today, who's somebody I've grown to know, like, and trust very much. T.H. Williams, Ph.D., I'll add that in there as well. But T.H. Williams, managing partner from Virtuent Wealth Management Group, is here. And I'm glad you're here, man.
Well, thank you for having me.
Absolutely.
This is exciting. It's going to be a great topic.
Well, we're going to talk about people's perception of the value of the dollar. And, when the headlines come out, we tend to panic or get nervous that the dollar's doing this or that, or maybe we feel conflated a little bit that it might be stronger in one season or another. But really, there are so many variables that go into a global currency and how it performs and what the implications are. And I really want, we're going to do some terms and definitions here today, but we're also going to get into a more global perspective of how why the dollar is really the go-to currency in the world. And so really want to pick your brain for this hour and do that. But before we do, let's get to know you a bit. Thanks for coming down because I know you drove down from Denver. So thank you for doing that.
No problem.
So where you come from, what's your educational background, all that good stuff?
Well, I've actually been in Colorado since 1990. Went to CU undergrad.
Okay.
Did an MBA, MS in finance, also at CU. More recently, just more a life goal was to finish my PhD. So I did that actually through DU. So got my PhD in finance and
in finance.
Business. Yeah, in business. And but yeah, been out here since 1990, and originally from Florida. But those were my teen years, so still have family out there. Today, I got 2 lovely daughters, 10 and 12 years old, and a lovely wife. We live in Denver, kind of close to Wash Park. But our practice, and the reason why I'm here, is that my practice is split between the Denver Tech Center and Colorado Springs, and a lot of our clients are in Colorado Springs. So I spend almost half my time here in Colorado Springs.
So a PhD in finance.
Yeah.
Was it worth it all?
It was tough.
Yeah.
It was tough. I mean, it was kind of, turn lemons into lemonade. I used the COVID years to finish that off, but it was a life achievement. I did it more for myself, but I've really found that it's helped me be better as a wealth manager for my clients.
Very good.
So I do apply it on a daily basis.
Okay.
Yeah.
Well, and tell us a little bit about the Virtuent Wealth Management Group, because you guys are kind of embedded in the Wells Fargo apparatus.
Correct.
Is that right?
Yeah. So we are one of the largest practices within the Wells Fargo Advisors framework. Mm-hmm. We go by Virtuent Wealth Management Group. A lot of people ask, what is Virtuent? And we kind of made up the word. It's the contraction of virtue and affluent.
Okay.
And that's because we see in our clients a lot of virtue and affluence. Sometimes there's kind of a war on being affluent. Mm-hmm. Affluent people don't, they don't really appreciate the fact that somebody may have really worked hard to make their money. But our clients are very virtuous. They're very giving. They work on, they're transferring the money to their kids, taking care of their families. And so we've seen that virtue, and that's kind of where we
very good. Okay.
Have Virtuent. Yeah.
So what's your ideal client look like?
So it's funny. I was just asked this yesterday by a client.
Yeah.
So, we like complexity.
Okay.
Believe it or not. I know that's a funny way to answer the question, but we want somebody that we can help them plan everything from financial planning to estate planning to specialized tax mitigation strategies, using certain investments. And then also who appreciate very bespoke and customized asset management. Now, as far as a dollar value, I hate to put dollar values on that, but we really don't get good until we have a grower at $5 million or ideally maybe over $10 million.
Got it.
Because that's when we can bring all the resources to the table. And we've got clients up to, net worths of over close to $100 million.
Very good.
Actually, a couple over.
Yeah. Oh, okay.
So, yeah.
So good client mix, and you're looking for that complexity, somebody who's really trying to make their money work for them.
Correct.
Yeah.
Yes.
Okay. And you've got a great team. And folks, if you're interested in TH's, what he learned in his PhD, as well as what he's learned over a stellar career with Virtuent and Wells Fargo, you can always find the articles in the Business Digest that we produce every week. So he's got a great article that's really gained a tremendous amount of traction. It's probably one of the most widely read financial articles that we've published this year in 2024. It's called the De-Dollarization, and do we need to be concerned as it relates to the dollar's strength and position in global markets? And what does it mean when those headlines come out? And TH, I really want to spend a lot of time on this because, we do get those buzz phrases and, you get those top line headlines and everybody starts to think whatever they think and, upwards up into panic mode. And there's a lot more that goes into that. But where I'd like to start is maybe defining what currency is. Let's just start with the basics, and then we'll grow it into a pretty heavy topic as we go downstream.
Sure. And it's funny. A currency has to satisfy three things. It has to be a store of value. And what I mean by that, like using the dollar as an example, I have to understand, or I have to believe that my dollar today will spend like a dollar tomorrow. And yes, we do know that over time, that purchasing power does get eroded, but not so much as tomorrow I'm really worried that it's going to be worth 50 cents. So it's a store of value that doesn't fluctuate too much.
Got it.
Okay,
that's one.
That's one. Medium of exchange, which means it's fungible. I can exchange it for goods and services. It's very easy to exchange, very fluid. So medium of exchange is that I can buy something overseas. I can also go and buy eggs with dollars, in exchange for other things or other currencies.
Copy that.
Yep. And then the third one is a unit of measure. And a unit of measure is, we base everything in dollars. If you think about it, it's everything from this microphone costs a certain number of dollars and a car costs a certain number of dollars. Eggs might be $3, or if you get in the organic ones, $5 for a dozen. So we base in dollars, and that is our unit of measure.
Right. And the global economy responds to that as well as we do here, correct?
Correct.
Yeah.
And that's what. And the funny thing is that the global economy recognizes the dollar as what we call the reserve currency, meaning it is the primary currency traded throughout the world.
Okay.
And so they are very comfortable with that because currencies are largely a faith-based system.
What's that mean?
Faith-based system, in that I have faith that dollar, that if I'm trading in dollars, that those dollars are going to remain stable, over time.
Got it.
And that if I'm paid in dollars,
so is that equitable to store of value?
So yes, store of value is exactly that.
Okay.
Correct. Yeah.
Got
so
it.
that I have faith that, and the faith, when I say faith-based system, and I know it almost sounds religious, it's that I believe that the U.S. is going to continue to backstop that dollar.
Mm-hmm.
So it's actually the full faith and credit of the United States that people are placing their faith in.
Absolutely. We're not going to have a coup tomorrow.
Exactly. And destabilize the dollar, because you don't want to have your assets denominated in dollars and then worry that tomorrow, just because of currency fluctuations, they're worth 20% less.
Yeah. And in other markets and in other countries, that's the case.
Oh, yeah. I mean, you've seen currencies and various other, and I don't want to go, we'll talk about some other countries, but you've seen certainly hyperinflation completely erode the purchasing power of various currencies over time.
Mm-hmm. Well, we're going to get into kind of digital currency, Bitcoin, those types of things a little later in the conversation. But when you hear that the strength of China's economy is influencing the value of the dollar, you're really not seeing the whole picture there.
That's correct. And I would actually expand that more towards not only China. China has never liked the strength of the dollar because they see it as a weakening factor for their economy.
Absolutely.
But I would also add in, and this is kind of where this headline is coming from, the BRIC countries, and that's Brazil, Russia, India, and China. I'm going to put an asterisk on India because India, I wouldn't place into this conversation as much. It's a possibility, but more Iran. So it's still BRIC, Brazil, Russia, Iran, and China. But those four are looking to create their own currency.
Got it.
Yeah.
Okay.
So we can talk a little bit about that as well.
And I do. And we'll get into BRIC and what that means and the volatility of that prospective currency coming to bear after we come back from the break. We're hanging out with T.H. Williams. He is Managing Director at Virtuent Wealth Management Group here in Colorado. We're back in a moment.
The U.S. Senior Open is back at the Broadmoor next summer. Don't miss your chance to witness world-class golf at one of the most iconic resorts. This holiday season, give the ultimate gift to your favorite golfer. Exclusive holiday packages including tickets, lanyards, and an official hat are now available while supplies last. Don't miss out on this unforgettable experience. Get yours today at ussenioropen.com.
All right, we're back here, second quarter Business Digest Weekly here on a December 6th. Hopefully you are headed to a nearby shopping mall or a nearby specialty store to pick up a gift for a loved one or a friend. Remember, we're shopping local this year, ladies and gentlemen, but glad you're with us. Hanging out across the board from me, or if you're watching us here on YouTube, you can see T.H. Williams. He is the Managing Director for Virtuent Wealth Management Group, and they're a group that's embedded kind of in the Wells Fargo financial apparatus there for private banking. Yeah. So, thanks for being here. So we're getting a much better, more clear understanding of A, what currency is, and now B, we're going to get into kind of the perceived stabilization of the dollar. Correct. Because we read these headlines, TH, and invariably we get nervous. We think, the market's crashing, the sky's falling, all that good stuff. And,
the de-dollarization.
People are
worried about that the dollar is going to lose its value. Yeah,
exactly.
Right. Mm-hmm.
And your position is really, your question in the article, which is fantastic, by the way, and you can pick it up in SoCo Digest in our monthly publications. TH and one of his team is typically writing for us to help us understand the monetary apparatus in general. So, help us understand. You asked the question, should we be concerned? You're saying not really.
Not really. And let's start with the stability of the dollar.
All right.
We kind of talked earlier about the three things that create a currency. So I'm going to kind of go with those. So first of all, is a store of value. 58% of the world's assets are denominated in dollars.
Got it.
So they're priced in dollars, 58%. Like the next several currencies don't even amount to 10%.
Really?
Right. So you've got, I think the euro might get there at about 10%, but beyond that, it's just a bunch of other smaller currencies. So store of value, 58% of world's assets. And then we talked about a medium of exchange. In the United States, or actually in the Americas, 96% of the trade is done in dollars. Go to Asia Pacific, 74% is done in dollars, which is contrary to popular belief. I mean, most people would think that they're using the yuan or the yen or something like that. And then really all else, other than, I'm going to carve out the EU quickly, but other than, so pretty much anything else is going to be about 70% is global trade is done in dollars. EU within the EU, not so much outside the EU, is about 2/3 euro.
Got it.
So most global trade is done in dollars. And then the last one is unit of measure. When people issue bonds, like the business world runs on debt, good or bad, we can get into, that'd be a whole different topic, but good or bad, the world runs on debt, liquidity, financing, whether you're a sovereign country and you're trying to issue debt to fund government operations, 71% of the world's debt is issued in dollars. And that's because they want the world to buy their debt. If you're going to issue your debt in rupees, if you're in India, you're not sure that somebody's going to pick up rupees, because the first thing you have to do is a currency conversion.
Right.
So you got to realize dollar is such a huge use asset, a use currency, that destabilizing that is very difficult. And then you just get into things like software, accounting systems, and all those things, the infrastructure, exchanges, import, export, and all those things that to just place another currency in there, all that has to be rewritten and rebuilt.
Oh. Yeah. I mean, that alone, the infrastructure cost alone would be formidable.
Yes.
So we're really relying on the dollar. Help us understand how these other players come into the picture. Because when you read the headline about Brazil, as you said, Brazil, Russia, India, asterisk, Iran, and China, a lot of folks are just tentative and nervous about that topic. So help us understand how that works.
It's funny to me because do I think that the BRIC countries will create a currency? I think it's very feasible. But that doesn't necessarily mean that it's going to be adopted. Why do you adopt something? Why do you adopt something? Because it's a better alternative. So on global trade, when you already have very entrenched systems using the dollar, suddenly they just kind of spin up this new currency, this BRIC currency, call it, and we can get into this a little bit, but which is also now going to be possibly based on oil reserves, which is another volatile asset. So show me why. I mean, it kind of, first, let's go down our three things. Store of value. There could be a lot of fluctuation in this currency, right? Especially because you've got different governments,
right,
with different agendas. And we should probably kind of do a deeper dive on that a little bit. But then medium of exchange, it hasn't been used, and you have to change all the systems. And then unit of measure, it's like, what is it worth? Someday somebody will have to say it's worth what? And you know what they were going to do? They're going to say, well, it's worth $20.
Of course.
They based it in dollars, right? So show me a use case on why somebody would adopt that other than China really wants you to.
Right.
Brazil really wants you to. They will use it amongst themselves, but that's really just replacing their own trade. Yeah.
Well, and you and I have spoken about this offline, that really the unifying theory here for them is their dislike for the United States.
Correct. And it's, they don't like the power projection of the United States. And so, your system of shared values is we don't like you.
Yeah.
I mean, what?
And that fluctuates.
And everybody adopt our currency because we just don't like them.
That's right. Yeah. Well,
that's the value prop.
Yeah.
Now, I know I'm simplifying it, obviously, but I just don't see why the rest of the world, why would Germany say, we really want to start trading in this BRIC currency now?
Well, and talk about, from an oil reserve standpoint, I mean, the biggest oil producing nations in the world, I mean, the top two are.
It's funny, a lot of people still think it's Saudi Arabia. U.S. is the number one oil producer in the world right now, followed by Saudi Arabia. They're kind of neck and neck. Followed by Russia, so part of that BRIC consortium, right? Followed by Canada. So 3 out of the 4 are not part of that, but you're going to base your currency on a commodity where the pricing power is handed off to 3 other countries that are not part of your currency.
That's correct.
Yeah. So, I mean.
Well, that's interesting, and it does. As the more we talk here, obviously, the more, the fog lifts on why the reports would suggest that any fluctuation in the dollar is normal. Yeah. Right.
Oh, and that's the thing. I mean, we got to kind of separate natural fluctuations of the dollar. So versus its adoption.
Right.
So it can be used the same amount if the euro appreciates against it.
Mm-hmm.
It's just that, European economies maybe had good economic growth, and so they appreciate it.
Right.
That's a normal course of business.
It's a normal course of business.
Yeah.
But, you talk about the BRIC nations. So, again, Brazil, Russia.
Yeah.
Currently, it's identified as India and China.
Yeah.
But you're also adding Iran in there.
Yeah.
And if we've seen anything over the last 50 years, it's that can be a rogue nation. And if one of those out of that group of currencies gets sideways with one of the other ones, which is quite feasible, now you've got another disaster on your hands. And now you do have potential economic collapse if that becomes the preferred currency.
Exactly. And the funny thing is they really don't get along all that well.
Yeah.
Again, their unifying value is that they just don't like us and they don't like Western nations. But also consider this, that you have multiple different government systems. The reason the EU exists and why the euro has had some strength over the past roughly 25 years since its inception was that they have somewhat similar values. The European Union, I mean, although they're separate countries, they still have somewhat similar systems of government, right?
Yeah.
But then you take a look at Brazil, which is this very volatile, democratic, left-wing right now nation that almost had a coup last year.
That's right.
And then you're going to marry that with, you're going to try to create a monetary union with Russia. That's kind of an autocratic communist system whose main export is fear.
Yeah, and a little bit of oil.
We're joking here, but it's weapons and oil. Yeah. I mean, that's kind of what they export. That's and then you've got China, which is a major powerhouse economically, but it's also a communist regime. And then you've got a theocracy, in Iran, run by the Ayatollah.
Mm-hmm. Pretty volatile.
Yeah,
and in a volatile part of the world. So
yeah.
Well, when we come back, I want to get a better understanding on the trade deficit component because, Trump's made some statements about tariffs. I want folks to better understand what that's all about. And then we'll also cover a little bit more around digital assets, so how does that work and how does that factor into the dollar's stabilization around the market or around the world. So your end of year summary is probably not a good use of your time or energy focus or worried about the de-dollarization.
No, and I would say, could the dollar erode some of its power over time? That possibly, but it's not like it's going to shift from 70% of global trade to 20% in a year. That's just not going to happen.
Right.
And there's nothing to really challenge it. Yeah. So.
All right. T.H. Williams is across the board for me. And we're getting a great lesson in understanding how the dollar functions, not only on a local level, but on a global level. And, what is currency? If you missed that in the first quarter, you can go back and listen to this on our Spotify or Apple or iHeart platforms. But this is a very good, sound frame of reference for understanding how the dollar performs and what we can count on as we're moving into our 2025 budgets and beyond, and how we're forecasting and, how our country as a nation performs. So the strength of the U.S. dollar is not necessarily in question right now. What is in question at times is how we're managing inflation and how we're managing other apparatuses in the financial system to help us continuing to be a world leader in terms of exports and in terms of imports as well. So we're back with T.H. Williams, Managing Director at Virtuent Wealth Management Group here in Colorado.
The ultimate gift is now available. This holiday season, treat the golf fan in your life to an unforgettable experience at the 2025 U.S. Senior Open at the Broadmoor. Special holiday ticket packages are available while supplies last at ussenioropen.com.
All right, third quarter here, Business Digest Weekly on a December 6th. Glad you're with us. We're hanging out with T.H. Williams. By the way, he's a doctorate in finance out of DU here. He is the managing director for Virtuent Wealth Management Group here in Colorado. They're embedded in the Wells Fargo private banking area. And, we're going to get into some conversation here that I want to make clear isn't necessarily advice or recommendations.
Right. Yeah. So I hate doing disclosures, but because I am registered and I am a financial advisor, nothing that I'm talking about can really be construed as advice today. Right. And it's an important thing. A lot of times people put that out there. It's important for me to tell you why. And the reason why is because I don't know your situation. Mm-hmm. So, but also today we're just talking about educational things. So
that's right.
Especially when we get into things like digital assets, this is not a recommendation to buy or sell or anything on digital assets when we get into that.
Okay. Very good. Well, I appreciate the clarification there. Yeah. And folks listening, obviously the whole programming around Business Digest Weekly is really to give you insights and education and an opportunity to see the moving pieces here in Southern Colorado for our economic ecosystem here. And this is a big part of how every business owner, leader thinks is, how are we using our treasury? How are we using our money to best advance our organization?
And how are you hedging against a risk that maybe you don't need to hedge against?
That's exactly right.
Right?
That's
right.
Somebody
could easily come in and say, hey, you got to hedge against this BRIC currency that's coming in. Mm-hmm. What are you doing to hedge your dollars?
Right. And that's, and understanding the volatility of those 4/5 countries. Mm-hmm. Okay, we're talking about Brazil, Russia, India, and Iran, and China.
Yeah.
And they're trying to create their own currency, and it's not, they're probably going to do it.
Yeah.
But it could be here today, gone tomorrow, and with the volatility in those respective countries, who knows?
Anyone can create a currency.
Yeah.
It's just a matter of whether you use it.
That's exactly right. Well, and to your point, 70% or greater of the world's infrastructure is wrapped around the dollar.
And you show me a better use case. Mm-hmm. People will actually use that BRIC currency if they show a better use case for it.
Yeah. So for the listener just chiming in, I want to just kind of give those statistics again, TH, as it relates to how different parts of the world are utilizing the U.S. dollar as its base.
Sure. So I'll just kind of do them quickly. 58% of the world's assets, the things we own, are denominated in U.S. dollars.
Got it.
In the Americas, 96% of trade is in U.S. dollars, 74% in Asia Pacific, and then all else other than EU is over 70% of trade is done in U.S. dollars. And then the world's business debt and sovereign debt of countries, 71% is denominated in U.S. dollars or priced in U.S. dollars.
It's overwhelming.
Yes.
Because the next closest...
It's the juggernaut.
Yeah.
The dollar is the juggernaut.
Yeah. Yep. And you kind of side noted that the EU is still a standout in this. They're a higher rate of their own dollar.
Yeah, they use their own currency within the EU at about 2/3, so 66%.
Okay.
But then once they trade outside of the EU, they're usually using dollars.
Mm-hmm. Is there a particular reason as to why?
It's just an easy currency for them to use. It's also, it kind of goes to the fact that they are a economic union, okay, which is different than a monetary union. The monetary union is what they're trying to create with this BRIC currency. It's just a system based on a single currency, right?
Got it.
They have an economic union in that they have shared economic values, shared growth values. They have a central bank, the ECB, and then they also have the free movement of people as well as capital throughout those countries.
That's
okay.
Exactly
So that's the difference, is that they've actually created a union, and they also have similar values. I mean, I'm sure the Belgians would say, no, we're nothing like the Swiss, but
right.
But in general, democratic. They have high GDPs. They are more free market oriented, things like that.
Very good. Well, in your article with us, it's the De-Dollarization, Should We Be Concerned? And you can find it on SocoDigest.com as well. And if you want to subscribe, go to SocoDigest.com/subscribe. I'll send you the newspaper for free. And you can get insights and ideas about how things work. And reading between the headlines is really what I want to get to here, because in one of your articles, you talk about, the sanctions against Russia post-Ukraine invasion haven't caused significant shifts in these reserves. And you're talking about the American dollar reserves. So explain that, because when people hear the newscast, it's like, okay, obviously we know oil is going to go up in price. However, the financial apparatus around oil is still based in dollars.
Exactly. So most oil contracts settle, because when you trade oil, you have to settle oil. So most oil contracts are priced in dollars. And so this fear that somebody else is going to use a different currency to price oil, well, again, who are the top two producers? United States, Saudi Arabia, then Russia, then Canada. So there's a real desire to keep that apparatus intact, right? So I don't see that being as a question in stability, the oil markets, because again, we produce more. And I also, in my head, I'm questioning, why would they create this BRIC currency and base it on oil when the pricing power is, well, it's already volatile by itself, but the pricing power is really controlled by the United States, Saudi Arabia, and then fourth place is Canada.
Right. So three of the four nations. Russia is number 3.
Yeah. So it's mind-boggling to me. And it really goes to the reason why they want to do that is that they're trying to get away from this idea that you can have an infinite supply of a currency. And that is a critique of the U.S. dollar, is that once we depegged from gold back in 1971 with Nixon, we can just print money, right? And that's a whole different conversation. We should come back and talk about that one, inflation, and we can get a little bit into that as well today, but a whole different thing. But, so they like the idea that you would have something that actually has scarcity, right? Gold has scarcity. There's only so much gold. Yeah. And I've heard, and don't quote me on this, but I've heard that actually if you took all the gold in the world, it would actually fit into two Olympic-sized swimming pools.
Okay. Yeah, it's not a ton.
It's not a ton. Well,
yeah.
It's many tons, actually. But
it's not what you would think. Yeah. It's not just everywhere.
But the thing about scarcity is that it doesn't allow you to just print things.
Yeah.
Now, the reason we had to decouple from gold is that we didn't have actually enough gold to satisfy the number of dollars. Like if you just cashed in all your dollars, you didn't have enough gold in your reserves to satisfy that.
Yep. Interesting. Yeah. All right. Well, I want to touch on trade.
Yeah.
Unpack that. And, Trump is signaling tariffs and things like that. So help us understand, read between the headlines there a little bit.
So tariffs and trade deficits. So I'll give one third point on trade deficits, because I think it's probably the most salient and most important point on why the dollar anytime soon isn't going to necessarily cede or give up its supremacy. And that is the trade deficit. We run a persistent trade deficit. And what I mean by that is we import more than we export. And I know we'd like to see ourselves export a lot more goods, but we're a $28 trillion economy. That is 2/3 consumption. Next biggest economy is China at 18 trillion. And they are more of an export economy. By importing more than we export, those people who sell to us have to receive dollars. So we are the only ones who have this massive mechanism of flooding the world with dollars. This year, in fact, it was like, I think it was August was 85 billion in trade deficit. What that means is that just under $1 trillion is being pushed out into global trade every year. China can't do that because they're a net exporter, right? If you're going to sell to somebody, if I'm going to sell to you, you're going to say, well, here's my dollars. I can't command, if I want you to buy my products, I can't say, well, I'd much rather have you pay me in yuan or yen or rubles, right? I'm going to have to accept what you give me. And what do we give them?
Dollars. Yep.
So it's the persistent trade deficit that is a mechanism of constantly pushing dollar supply and demand. Economics 101, supply and demand. We push dollar supply into global trade every year.
And we do it well.
We do it very well.
So, when we see, like you said, the sentiment is more, we wish kind of we were a little more of an export dynamic. But really, there's an advantage to being more of an import dynamic as well.
That is one of all these things have give takes. A lot of people want to see things kind of in a vacuum. And if we just export more, we're going to be a much better country. Well, understand, we still produce quite a few things here in the United States. We just consume them internally.
Right.
And really, this is nothing more than a math equation. We do export quite a bit. Mm-hmm. It's just that we import more. Doesn't mean that we don't export. We export a lot of things.
Right.
We're really good at exporting high-end items. We're not good at exporting or manufacturing things like, I think of like the thing you get from China the most is like phone cables.
Mm-hmm.
You ever notice that?
Yeah.
You tend
Plastic
to get wires and cables and, whatever, your HDMI cables, And we don't, honestly, Americans aren't going to build those things because you'd have to price those up, to 2 and 3 times the price.
That's exactly right. Well, before we go to the break, I want you to touch on Trump signaling, tariffs with Canadian markets, Mexican markets. So, I mean, what do you see here? What's between the headlines there?
It's funny because honestly, I think he's giving oxygen to this BRIC currency.
So it could be counterproductive.
Well, it's like, this thing is not a challenge to the dollar, so ignore it. One of the most offensive things you can do to somebody is ignore them. So just ignore. Just it's not even. You're not a thing, right? But so he has signaled tariffs, and it's beyond just the BRIC currency tariffs. But the idea of tariffs does actually, in a weird way, it will have a tendency to strengthen the dollar.
Okay.
Typically, does tend to be somewhat inflationary.
Yes.
But it's not, this is on paper how it would work out. But at the same time, if you have a demand shift to domestic produced goods, then that should increase the workers' compensation and their purchasing power, which would offset any inflation.
Very good, TH.
Yeah.
Very good. All right. Well, when we come back, we're gonna wrap things up with a little conversation around digital assets, because I know a lot of folks have questions around that. So, TH, I should say Dr. TH Williams, but you don't like that.
No, I don't. Like
TH Williams, he's managing director at Virtuent Wealth Management Group here in Colorado. They're in Denver and Colorado Springs, and he drove down to talk to us to give us some insights in between these headlines and help us understand when it's time to be concerned and when it's not necessarily time to be concerned. And as it relates to the de-dollarization, not anytime soon. Could it happen? Absolutely. But as of right now, no. We're in a very strong position, globally speaking, with 70% of control in all the major markets around the world, with the exception of Europe. And, of course, we're trading. Everything's base value comes down to the dollar, including oil. So anyway, we're going to get some final thoughts from TH when we come back, and some insights on the digital assets we all have. Back in a moment.
The U.S. Senior Open is back at the Broadmoor next summer. Don't miss your chance to witness world-class golf at one of the most iconic resorts. This holiday season, give the ultimate gift to your favorite golfer. Exclusive holiday packages including tickets, lanyards, and an official hat are now available while supplies last. Don't miss out on this unforgettable experience. Get yours today at ussenioropen.com.
All right, we're back here fourth quarter with T.H. Williams, PhD, and he's also a certified financial planner with Virtuent Wealth Management Group here in Colorado. There's an office here in Colorado Springs as well as in Denver. If you want to look him up online, you can go to virtuentwmg.com. So Wealth Management Group, Virtuent Wealth Management Group, or virtuentwmg.com, or give him a call at 844-925-0888. And TH, welcome back to the program. Glad you're here.
Yeah, this has been fun. I've really enjoyed this.
Yeah, you're giving us a great education. And again, we'll just kind of, headline the disclaimer here. This is not advice. This is not recommendations.
Hate to beat that drum, but I just, I don't want to get in trouble. And I would hate for somebody to actually trade on something like this.
Exactly.
Right? Yeah,
exactly.
It'd be wrong for them. Yeah.
So this is educational, informational, and how the dollar from almost an academic standpoint really behaves in our global economy these days. So the overarching executive summary is here. The dollar is still very strong. It is
very strong, very stable. In fact, one of the biggest problems with a lot of international investments is that it's been tough to. They've actually had decent earnings in some regards, but the currency effects of the dollar being so strong makes them appreciate less in dollars because they're appreciating in their own currencies, which are weaker. So it's tough to invest internationally right now.
Absolutely.
On those types of things. Yeah. So again, not advice, just statement of fact.
Just in information. That's right.
Education.
So digital assets.
Yes.
Okay. So this is a thing. We've all heard of Bitcoin, and it's probably going to continue to be a thing. Explain what it is in the fact that it does have traction.
Yeah. So, what Bitcoin is, and it's kind of the juggernaut, again, back to it, within the digital asset world, Bitcoin owns about 55% of all dominance. They call it Bitcoin dominance.
Got it.
Add in the next biggest one, which is only about 15 to 20%. That's called Ethereum. And you're already pushing 60% of the overall market. Now, the funny thing about digital assets, there's well over 100,000 of them out there. You and I could create one right here, with a laptop and float it out there. But again, this actually speaks to our earlier point. Just because you create it doesn't necessarily mean that it's adopted.
It's going to be adopted. Yeah.
I do believe that I wouldn't say a challenge to the dollar, but digital assets are going to continue to be a thing. They're going to, as they mature, they've got a long way to go on maturity. They've been around since the first Bitcoin paper was by somebody who we don't know as a pseudonym, Satoshi Nakamoto. 2008, wrote a paper basically describing how he's going to build this digital asset called Bitcoin, and started trading a couple years later, and it's been off to the races ever since. But what's interesting about Satoshi, just to give a history lesson, is that I think it was around 2011. Don't quote me on that, but it's a few years after he launched Bitcoin, he signed off of a blog and just said, "I've moved on to other things," and nobody's ever seen him since.
Is that right? Okay.
Yeah. So the founder is dead.
Okay.
And the reason why this is interesting is that what they were trying to solve with Bitcoin is the thing that we were talking about with the dollar, and that is that you want to have a store of value. A medium of exchange. Now, it is true that Bitcoin and digital assets in general are very easy to exchange, very fast. You can do it all over the world, mainly because they're not unregulated. That's part of the problem, is that you can move them throughout the world because we haven't really figured out how to regulate them here in the U.S., as well as in other countries, although it's all coming. So you can move them throughout the world very quickly and they're disintermediated, which means you don't have to pay a wire fee. You don't have to have somebody confirm a wire. You don't have to, it's your asset. There is no custodian. So when you put money into Wells Fargo's bank, Wells Fargo is custodying that money, those dollars for you. If we have stocks, we're custodying those stocks at Wells Fargo Advisors, right? But with a digital asset, the custody is on your own digital wallet. There is no intermediary. Now you can use some of these exchanges out there and you can have them custody it for you. But so you and that's what they call disintermediation, right? So you're removing the intermediary from that. So that actually collapses costs, increases speed. So they're very efficient in that regard. And then the other thing is, with them is that they were really trying to create this unit of measure. Now, the problem with the unit of measure is that Bitcoin is so volatile. Like, what's it worth? It just it got close. I think it's like 95,000 today. But it's been as low as, I think the first trade was 14 cents.
Okay.
So I don't know that you want to use that as a currency. So that's kind of where it fails, this currency test, is you don't want to price something that can move that quickly. Normally it has on average, it has sometimes 70% drawdowns. So peak to trough. And so, what the reason why this is interesting is that what they were trying to solve with Bitcoin is the thing that we were talking about with the dollar, and that is that you want to have a store of value. And so will digital assets become a thing? Absolutely. They're trying to solve some of the stability using things called stable coins, which are just nothing more than, oddly, digital assets pegged to the dollar. so back to this, we're back to rebasing to the dollar. So it's still the unit of measure. But what you're going to really find is that the blockchain technology is what's interesting for finance and for business and commerce, because it's very secure. You do hear a lot of fraud going on in the digital world, but that's mainly due to, it's the same thing. It's phishing scams. It's human error. Yeah. Yep. So
help us understand CBDC.
CBDC. Okay. So it's funny. I want to bring this up because some people might think that you've heard that Trump is a supporter of digital assets, mainly Bitcoin. He actually spoke at a Bitcoin conference when he was running.
Got it.
And so you've seen this big shift because previous administration was very anti-crypto. And this shift more towards digital assets. But at the same time, he says there will never be a digital dollar. What a CBDC is a central bank digital currency.
Okay.
So, and there are actually several countries that have already launched them. China has. The yuan has been digitized. So it's nothing more than just the dollar, if we were to create one here, moved on to a blockchain technology to where the Fed's not really pushing it out into a general centralized ledger and banks are buying these dollars and moving these dollars around, but they're simply saying on a blockchain, we're going to have this much available. Mm-hmm. And then you can move those around. Now, the reason why people are really skeptical about that is that if you own, let's say I have 1,000 digital dollars and I go buy stuff, effectively, and this is the fear, and I don't know if it's true or not, but the government could see every single transaction because they can read that blockchain.
Right.
So you can read every transaction that's ever occurred for Bitcoin on a blockchain viewer.
Right.
Everything since the first trade is public. Now, you don't know who did it, but you can see every trade.
Okay.
And so the fear is that if we launch a central bank digital currency, the government's going to be able to watch everything. You know, I hate to say it, with subpoenas, they can watch everything anyway. So, I mean,
true.
You know, I mean, the FBI could really find, they could see where you moved money. So I'm not going to necessarily support the idea of a central bank digital currency or be against it here. But it is very different when you talk about a CBDC versus something like Bitcoin, which is its own entity.
Okay.
Yeah.
Well, and again, based in dollar, right?
Yeah.
Ultimately speaking. Well, give us an executive summary of some of the things that we've talked about here, TH, because, again, we want folks, and I encourage our listeners to go back, listen to this full broadcast, get an understanding of what currency is and the three components that really define what a stable currency is, and then understand how we play with other currencies in the sandbox on a global level. So what are some of your closing thoughts for the folks listening to this?
Well, I mean, it's kind of what we've been talking about is that the dollar is stable. I am concerned about the long-term devaluation of the dollar, and that should be another topic of discussion. That really gets into debt and things like, and the Federal Reserve and its independence and all those things. But I mean, the dollar as it stands is still the most stable currency out there, and I don't think it's going to be challenged by a BRIC currency based on a oil, what we would call a petrodollar or a petrocurrency.
Got it.
I don't see that as being a challenge. I think digital assets will be not so much a challenge, but will be adopted more going forward. And you're going to see, I think you could see some of our commerce move on to digital blockchains. But in general, I don't have this fear when I see BRIC countries or, euro, and especially, euro appreciation happens naturally. Sometimes the yen appreciates against the dollar. Those are natural currency fluctuations,
right,
and are very different from the actual adoption and use of the currency itself.
Got it.
So, I mean, I would leave people with it. When you see these headlines, don't worry. I kind of wish we didn't react to them so much. You want to talk about other problems that I'm worried about as a financial advisor? Man, we got to have another, 3 or 4 hours of interviews. But that is not at the top of my list, is the devaluation of the dollar. Or the devaluation, but not the de-dollarization, the loss of its use.
Very good.
Yeah.
T.H. Williams, PhD, as well as certified financial planner with Virtuent Wealth Management Group here in Colorado. As I said, they do have an office in Denver and Colorado Springs. If you want to reach their group, you can reach them at 844-925-0888 or visit them online at www.virtuentwmg.com. TH.com. And the WMG stands for Wealth Management Group. TH, this has been a great education. Thanks for giving us some of your insights.
Thank you, Dirk. This is really, really fun. I enjoyed it.
Really appreciate you. And ladies and gentlemen, it's just now 1 short hour away from happy hour. Yes. Well, it's not a beer, it's but I can still toast to you. Have a happy weekend, folks. Shop local, and we'll see you next week.
You've been tuned in to Business Digest Weekly with Dirk Hobbs. If you'd like to be considered for a spot on our show, email us at info@coloradomediagroup.com.